Hey, what is going on, and welcome back to the channel. In this video, we're going to be taking a look at Aave. I do want to say that I'm not a financial advisor. You should do your own research before investing money into crypto. Now, I haven't been uploading for the past couple of days. I do apologize. Some problems with the internet here, all thanks to Putin and Russia, baby. Yes, I am in Ukraine currently, so very difficult to be uploading on a daily basis with the ongoing war, but I do try to keep you updated in the Telegram chat when I can, so feel free to join and look for updates in there. But jumping into Aave on the daily chart, so we do have the Fibonacci retracement set up from the swing high of May to the swing low that we printed here in February. So obviously we did lose the June/July bottom, so we essentially printed a lower low, which is very negative in my opinion. And considering this is our swing low and we will not go any lower at the moment, I have set up this Fibonacci retracement, and let's see what are our targets here. So obviously we have the golden ratio, which is the 0.618 at $338. So this is an important level that we're going to need to break through in order for us to be bullish, and in order for us to be more certain that we're going to at least retrace to the previous swing high here at $666. Now, what can happen obviously is we create this low, we start coming up, you create an uptrend, you have the bullish cross on the daily chart, which is when the 20 yellow EMA crosses above the 55. You get to the golden ratio, and then you get rejected from there because that area has a lot of resistance. Now, if you get rejected from there and you are supported by one of the Fibonacci levels below, which is the 0.5 or the 0.382, and then you come back once again and break through, back test as support, that is a bullish scenario, obviously. But what usually happens, the so-called dead cat bounce, basically you run into the golden ratio and you print a lower low, essentially a continuation of the downtrend. Now, that is the bearish scenario, obviously, but the markets are very volatile right now. And during these times, Bitcoin is really showing its value because no one can cancel Bitcoin. No one can, do anything to Bitcoin. It's going to be there. It's always going to be there. It's decentralized. You can't censor Bitcoin. Now, like I said, the bullish cross is incoming over here. Now, what we could be looking at is a similar scenario to what we had over here, where the 20 EMA was looking like it was going to cross above the 55, but we ended up having an EMA squeeze. We went all the way down here, and we continued with the downtrend. Now, this is something that could happen right now. So we are running into a level of resistance right now at $171. This is the 0.236 Fibonacci retracement over here. And as you can see, we need to break this high to be bullish, right? Then you're going to be having a target to the 0.382. We can lay a lower fib. But right now, if you run into this resistance, you can come back down for support on the 20 EMA, on the 55 EMA while they have the bullish cross. But this is your major resistance level for now, okay? If you don't break through this, you can create essentially a double M top pattern here, or if you get rejected right now, you're creating a lower high and you have your low here. You can potentially go even lower with this downtrend because alts have been, getting destroyed with these, capitulations that Bitcoin had. But Bitcoin is doing not too shabby at the moment, sitting on $44,000 at the time of recording this video. So some of the altcoins are obviously going to appreciate with that Bitcoin price pump. But like I said, we need to get through the 0.236, back test that, and you still have resistance level here. Like I said, this is your major resistance that you need to get through, which is around about $190. This is where this local high is. So it's all about the highs. You break the highs, you have targets to the upside. Simple as that. I wouldn't be swing trading anything right now, buying the dips, buying off of the 20 EMA is a very, very smart thing to do. Now, jumping into the daily RSI here, you can see that we did have this horizontal resistance and we broke through it with authority. And I always tell you guys, once you have these horizontal resistances, and if you have more than 2 touches or at least 2 touches, and then you end up breaking through it, you usually do that with authority. And as you can see, this is exactly what happened here. We broke through the 20 EMA and we haven't even back tested it as support ever since. So looking for that back test around about $145. So I'm just going to give you an area where I think you can potentially look for some good entries for Aave. So this area over here is great for entries because, you know, we need to back test that as support anywhere from $146.8 to $140 per token is a great entry, you know, slash buy zone for Aave. Now, yeah, that is it for this daily chart. Actually, no, that is not it. Let's look at some of the targets over here above. So if we start breaking this swing high over here, right? This is the first fib level that we have. And once you start breaking that, like I've been saying, you break resistance, you have targets to the upside. Our next target is going to be the 1.618 here, which is sitting currently at almost $2,000, just, you know, $2 shy or $2.8 shy of $2,000. And that is going to be our target only after we break this first fib level at $666.3. Now, once you do that, you back test that level as support, hopefully, then you're looking at this target over here. I apologize about the messages. I do need them right now because we're getting air raid alerts all the time. So we need to be aware of the situation. So that's why the messages are going to be popping up. So you're going to be looking at $2,000 over here. And not saying we're going to get there, obviously, even if we do break through this level, but usually more often than not, by breaking this first fib level, you get to the 1.618. And you do have resistances below that at $1,390, which is the 1.414, and the 1.272 at $1,080. So those can be some nice take profit zones. For example, even if you got in right now, that is a 538% to 1,075% gains, which is not bad. It is not bad at all. So buying Aave at these low prices is very important if you've been buying Aave all the way up here. So dollar cost average your way into the project. Let's jump into the Binance chart. Jumping into a bit of a different chart here, we're still on the daily chart. I just want to show you this bullish pattern that we have. So we have this falling wedge, which is a bullish reversal pattern. Ignore the wicks. We need the body candles to touch the support and the resistance over here above us. As you can see, we broke through with authority. Once you are tightening up near the apex of any pattern, you usually see a breakout to the upside. Sometimes you can have breakouts to the downside, obviously with the same authority. But right now, we are targeting $188 because that's where the falling wedge was created. So this is going to be our target. From there, you can potentially look for some support on the 20 EMA or the 55 EMA on the daily chart. Those, bring those out on your chart. Now, jumping into the daily RSI here, you can see that you're almost getting to the overbought zone. Once you start getting above the index of 70, that is the danger zone. That is that is saying that you are currently overbought and the price will likely, pull back a little at least. The MACD is getting overextended a bit. We're getting above the histogram. Aave is very bullish at the minute. The Stochastic Rsi on the daily chart is overbought as well. As you can see, we're above the index of 80 on the Stochastic. If you're above the index of 80, then you're overbought on the regular RSI. If you're above 70, then you're considered overbought. So things are looking good for Aave. Once we have that bullish cross, that can be your confirmation of the uptrend, obviously. So look for that. But obviously, it's all about this local high here. This can be a resistance level that we're going to get rejected from, and then we can potentially come back down to the EMAs for support. Now, that is pretty much it. Also, pay attention to this bullish divergence here. So let's see. As you can see, the RSI was printing higher lows while the price action was printing lower lows, and this is a bullish divergence. And as you can see, combine that with the falling wedge, and combine that with the stochastic RSI being so low over here, all of this basic, and actually, yeah, the stochastic had higher lows as well. So multiple bullish divergences here, and this is what you get once you know how to use these indicators to your advantage. You know, you should have been buying here, here, here. Anything below 130 really is a treat. So yeah, that's pretty much it, guys. If I missed out anything on the charts, please let me know down below in the comment section. Stay safe, guys, obviously, and thanks to everyone who has been sticking around on Patreon. I really do appreciate it. I know I can't be, putting out content every single day, but hopefully that will change soon, and hopefully the war will end very soon. The Russians are getting their asses handed to them. I do apologize. I am going to be bringing up the political situation, the war that I'm currently that's currently taking place in Ukraine. So, if you don't enjoy that, I mean, I'm sorry, you can, stop watching these videos, but I'm going to be talking about a little bit of everything during these videos. So yeah, thank you for watching. I'm going to catch you in the next one. Peace out.